Hello fellow investors and welcome to Sylle Invest, where we bring knowledge to investing. Today we will be analyzing the highlights of Newlox Gold's Q2 financials and MD&A. But before we start talking about the financials, I'll briefly explain the company Newlox Gold Ventures. Newlox is an ESG gold producer that collaborates with artisanal miners. They do no gold exploration, which is expensive and risky. They extract 90% of the gold, whereas artisanal mining practices are at best 40%. They do environmental remediation by removing mercury from tailings and by preventing mercury from being used in the first place. And the facilities, they are low cost, high margin and built quickly. So let's dive straight into the income statement. Here are the numbers, but we'll go from the top. And as you can see, I have brought the quarters from Q2 from 2020 to now the Q2 2021. Looking at the current numbers that was released, we can look at the revenue as starters. It was 319,780, which is a 20% increase from the quarter past. Now this might sound like, 20% plus, that's amazing. But honestly, I and many others expected a lot more, a lot more. So this is actually a little concerning, and I look forward to hearing a statement from the management or Ryan to why the revenue is so low. There can be many reasons for this, because like plant 1 currently, in August, I think August and 10th, they said that they have a production of 50 tons per day. And if that was the case, then these revenue numbers would be at least twice these levels. But as I mentioned, there can be many factors to why it's lower. There can be scaling issues, and that's like the worst case. But there can be other things too. For example, they are scaling up. So it can be the case that the scaling up actually interferes with the production. It can be that they lower the output while they scale up, also to optimize the process to find where they fine tune what they should do, to just optimize it. And also it might be because of their R&D. They do have a lot of technologies that they are testing out to they have 3 different products that they are testing out to extract methods of extracting gold. And when they test this, of course, that would take an impact of the production. How much impact this is, we don't know. They haven't told us, but I expect there to be some sort of impact. So that might be one of the reasons why we see the revenue coming in so low. As I mentioned, I look forward to the next Q&A with Ryan, and we'll see what the reason for this is. But moving on, we see the cost of sales. Well, they've increased as the revenue increased. And the gross profit down below. This is actually a big positive. The gross margin is still very large. It's the quarter, the Q1 had 64% gross margin, and now we have 60%. So it's very, very high. So that they can have these high margins 2 quarters in a row, that speaks loads for the future. So I'm looking forward to the coming financial statements to see if they can keep this up, because that would have been great. Moving on to operating expenses. Well, they've increased a lot from the quarter before. The Q1 had actually very, very low operating expenses. So the Q2, the difference here is mainly 4 parts: advertisement and promotion, consulting fees, professional fees, and also royalty payments from their production. Are the main causes for this increase. And one interesting fact is that the royalty payment was twice from Q1, which would imply that the revenue should be twice of Q1. It does not reflect though in the revenue, so I'm unsure why the royalty payment was so large. I'm sure there's an explanation to this that I just don't know of, but that's at least something to take into consideration. So if the revenue, or if the revenue were based on just the royalty, which it should be, then it should have been a double in production. Moving on to other expenses, basically the same, so I won't even touch that. And the net profit for this quarter is minus 509,142, which is, well, they are having a lot of expenses overall to expand and move forward. So this is not unreasonable. Overall, the income statement, it wasn't that great, to be honest. I look forward to an explanation for the revenue and the gross profit. That's really good to see. And I also like to see that the royalty fees are large, because that really tells that they have production going on. But other than that, it's not very hot, not the worst, but could be greater. But moving on to something far more interesting is actually the balance sheet. Here we're going to talk about assets and liabilities, and here is where this shines a lot. I'm going to start with the total asset in the top. So the total assets right now is 6.5 million roughly, compared to 3.9 million the quarter past. So the total assets has increased by 65% over one quarter, mainly because of warrants, or only because of warrants, to be honest. A lot of warrants has been exercised. So that's nice cash for the company. And you can see actually down below, if you look at cash, that they have 5,328,498 Canadian dollars. That's a lot of cash, and it's an increase of 67% from the last quarter. That's a huge increase, and that's really good to see. Now some might ask, why do they need over $5 million in cash? And the reason is because the plants, they cost a lot. This money is going to be what's going to pay for the coming facilities. Let's take an example here. So the Boston mine, which is supposedly 150 tons per day when at full, that has a capex of around 2 million. So this, the first Brazil plant, according to Robert McWhirter, the plant 3 might be 250 tons per day. So if 150 tons per day were 2 million, I would expect the plant 3 with 250 tons per day to be around 3 million in capex. It gets a little less due to if it's a bigger sized plants, the capex is going to be a little less. So 3 million is what I expect for the next plant to be around, depending. I look forward to see what when they release information more about this plant, but I expect it to be quite big. So having over 5 million when this one requires basically 3 million. I say that's very neat. That's very neat. And that also means they have cash to proceed to plant 4, etc., etc. And they have lots of warrants still to be exercised. So this is only going to increase, at least for the coming year. Moving on to something also very interesting is property, plant, equipment. It's one of those fields where basically plant 1 and plant 2, to know that they are progressing. Of course, revenue is one thing, but plant 2, you can't look at the revenue. It's not finished yet. But if you look at the property, plant, equipment, you can see how much value do we have in these things. And it increased by 82% in one quarter. This is, for me, a nice validation that they are actually really expanding, putting their money into the plants and the equipments. So I see this increasing even further in the future, but having 82% increase in one quarter, this is one of the best things for me. This entire the balance sheet, the assets part, huge. I think this is really solid. And moving on to something that I also think is solid is the liabilities. As we can see, we have around 2.8 million in total liabilities compared to 3.8 in the quarter past. So in one quarter, we have reduced the total liabilities with 26%. I would say that's a huge decrease. I would say that's great. That's great news. And looking at the current liabilities, it's basically the same, going down 3%, so doesn't mean much. But the non-current liabilities has a decrease of 29% to around 2.4 million. And the main reason for this, or basically the only reason for this, is the convertible debenture. As we can see further, we want this to, of course, in the end reach 0. But until we reach there, I really look forward to this decreasing, because it will decrease their liabilities overall. It's 2,231,000 basically. That's a decrease by 31% from the last quarter. So if you look at this image and just, take it in, like the total asset increased by 65% and the total liabilities decreased by 26%. That's for me a huge de-risking factor. And as a comparison, in Q1, Newlox had 3% more assets than liabilities. Now in Q2, they have 2.3 times more assets than liabilities. So if things were to go to hell, now I don't expect it, but if they were, they are in a good position to remove those liabilities. So this is fantastic. And then I looked at the MD&A and read through, see if I can find something interesting. And the thing I found was basically this. It's about Plant 1, Ororoca, to be finished in 2021, which means within 1 month. And here's the statement. The company continued developing its Ororoca processing plant during the 6 months ended September 30, 2021. The Ororoca plant is in its processing ramp-up stage, and it is expected it will reach full-scale productive operation status during the current year. The last part is very important. So this MD&A, it was released and dated for the 29th of November, which means like they're predicting something within the coming month, like very, very short term. It's not like, it's going to be done in 3 years or in 5 months. It's going to be done within 30 days. So I would be surprised if it was pushed at least a lot away from this. So this is something I expect this year, and I think that's going to be great. Something I want to raise though is they mentioned Plant 1, but also they did not mention Plant 2. The mentions of Boston was basically not even there. There was like one sentence where they'd be like, yeah, we've worked on the Boston plant and it's in construction. Like, we know that. They did not mention when it's going to be completed or the status. So that might be an indication that there has been some delay. I don't know, since it isn't written. I can't confirm nor deny. But it would increase the chances that it might have been delayed like to the beginning of the next year. But I mean, that's just me speculating, since they didn't mention it. But hopefully it will be this year, as they mentioned. It was just recently they said it's gonna, they really expect it to be done this year. Also one of those like short-term predictions, so we might as well just do, but it's a little concerning that they did not mention it at all. Yeah, and that's all I had for this financial analysis. It wasn't too much to dig into, so it was pretty easy to just skim through and just make this video. Yeah, and if you want to discuss the company with me, like, join Penny Queen's Discord and discuss it with me and other investors, and the link will be in the description below. And as a disclaimer, I own share of this company, and I'm not a financial advisor, and you should always do your own due diligence, and you should only spend what you can afford to lose. So if you found this video helpful, please like and share, and don't forget to subscribe. And if you want to support my work, please consider becoming a Patreon or donating. A lot of research and work are put into these videos, and your support is really appreciated. Thank you for watching, and have a good one.